The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Welcome to the COB this Wednesday. I'm Juliette Siley. Well, it's a little bit of what we're calling a weary Wednesday. We started out quite strong, but then we started to see a bit of petering out in the afternoon trade. Of course, a lot of focus going to be on the US session, those FOMC minutes, Nvidia results as well. Some interesting moves from overseas with the 10-year JGB yield rising in on that key 1% level. And the RBNZ in focus as well. So let's just get to our three themes because it was a bit of a weary Wednesday, as I said. We had this fall coming through from Telstra, kind of offsetting some of the gains that we saw elsewhere, with those iron ore players looking pretty good elsewhere in terms of some of the sectors. If I just see where we've all ended up, I think we had utilities and materials also in terms of some of the big moves. So telco really dragged down by Telstra. It was down 2.5%. Some of those consumer discretionary stocks also weaker, off by 1.3%, and energy under pressure too. On the other side, you had good gains in utilities, in materials, in the A-REITs. I was speaking to Centuria earlier. They're doing very well. So all of that just meant the day ended flat. We've got hawks in charge there as well, because I think it was for many a little bit of a hawkish surprise from the RBNZ. They did keep rates on hold. That was widely expected. But they very much still talked about that inflationary challenge, when a lot in the market are expecting that the RBNZ will cut soon, and we're potentially thinking that there might be a bit of a more dovish tilt. Eagers as well. This was one of the big falls today, and it kind of comes on the back of what we heard from Bapco as well in this space, but slamming on the brakes and sending its shares down by some 15%. Now, when you look at the numbers, everything looks okay, but it is the fact that they say, look, consumers aren't spending, and that means that their overall underlying profit, they think, will be down about 15% from this time last year. Let's have a quick look at what we saw in terms of the sectors. It was, of course, Telstra dragging down the telcos. You would think job cuts would mean people would think, okay, you are trying to increase your revenue there, so shares would go higher. But there's been a lot of broker downgrades on the stock. We had the likes of Morgan Stanley, Macquarie, Jefferies, all cutting their price target. And then, of course, you've got the potential merger there as well with some of those other assets in the space, which is going to potentially weigh on Telstra's, can we call it monopoly or grip hold? In terms of the utilities as well, let's have a look there. APA Group looking quite good. Genex Power was flat. Consumer discretionary, I mentioned, took a bit of a hit today. Harvey Norman down by about 0.25%. And having a look at some of the top movers, Webjet posting earnings. Underlying profit up 40% to just over $188 million. The reason Webjet shares are rising, though, is because it announced potential plans to spin off its two businesses into two separate listed entities. The fintech lender Plenty posted a 47% increase in full-year revenue. Shares ended flat. Drone Shield there up by about 1/4% or 1/3 of 1%. It's got a repeat contract worth $5.7 million with the US government. Namoy Cotton saying no deal to that Louis Dreyfus offer, citing that an independent expert has concluded the offer isn't fair and reasonable in light of the Olam offer. And as I mentioned, Eagers Automotive slumping there as it indicated that it could see underlying profit fall. All right, let's get warm welcome to Mark Gardner from MPC Markets.
Good afternoon.
Hello. Nvidia, that's what we're looking forward to now, right?
Yeah, the whole market's been waiting all week, really. It's sort of even, it feels like a payrolls night almost, really. I think overall, this is obviously the last of the really big companies to report. Well, it's certainly last of the Mag 7 to report this season. So, and we can see their expectations of, obviously, the average price move for the last 4 quarterly updates has been up 11.6%. Tonight we're expecting 5.6, revenue of $24.5 billion. And in the last 12 months, they've beaten on average with the EPS by about 19 to 20%, and then the revenue by around about 13. So realistically, they're going to have to beat, and they're going to have to beat, pretty solidly. The stock's pretty much at record highs as it stands at the moment, and there's been a lot of news stories come out in the over the last sort of, week or so about the concerns around the increasing power demand from all these chips. It's I think it's around about 13,000 gigawatts of power, just the NVIDIA chips alone, going into new data centres. So that's a small city in the US, about I think roughly around the 10 million person mark, or 5 million households. So it's it is of considerable worry. It does really play into that. Obviously, that copper has been going nuts this week, but uranium as well. So power and copper essentially will be needed for these data centres. So.
I think we're having a bit of a problem with your mic. You know what? This is live TV. You take mine, and I'll take somebody else's because we want to hear your thoughts here. This is just live TV at its finest.
No worries.
That one.
There we go.
Sorry, you're talking a little bit about the data centres. I mean, I was talking to somebody earlier about that as well. The demand here for data centre power and increased demand then that you see reacted in the metal space too. Yeah,
well, copper, you need 65,000 pounds of copper apparently to bring on a gigawatt. So, I mean, we've already got shortages coming there as well from the energy transition. You've seen some of the International Energy Agency update their forecast for green transition as well. Is going to be increased demand for copper on top. We had a failed coup in the DRC in the Congo in the last 2 days as well. That's the largest African supplier. We've had many of the major copper producers downgrade their guidance on their production as well. So I think BHP is extraordinarily cheap here at the moment. It's got until 5 p.m. London time.
Yeah.
I think that once that's out of the way, we'll see BHP head much higher. The likes of Rio etc. have been outperforming recently. But I mean, got to remember as well, BHP is sitting on the largest uranium deposit ever discovered in the world. So if they decide to pull the trigger and really ramp up production there, it's playing into two very large thematics. I mean, the likes of Ireland have actually banned data centre expansion at the moment. It's taken 1/5 of their electricity.
Wow,
so we're getting to the point where these while everyone loves AI, the power demands on it are massive. So. Look, it's not lost on the likes of Bezos and Gates are involved in a Californian startup that's using an AI-based Google mapping for minerals, and they've found a copper mine. Well, they found a copper deposit in Zambia. So BHP are involved in that as well. So yeah, it's not lost on the major players, and with the Mag 7 pretty much all needing copper in one way or another. They've got nearly 400 billion in cash sitting on the sidelines. They're not going to let a little thing like copper get in the way of the blue sky earnings from the AI.
Is there any way to play that then in some of these miners? Or you look at ETFs as well, or how are people sort of getting a piece of this pie?
We're using Wire ETF at the moment, which is the global copper producers. Obviously, there's a little bit of BHP in there and Sandfire in there as well. We think Sandfire is a little bit overpriced just on the back of the fact that it's outside of BHP, it's the only large cap copper producer, and I think it's overvalued as it stands. They haven't got a great track record at executing projects. So we're looking in the small cap region. Hillgrove's one we've been looking at, MAC, A1M in that space. Obviously uranium has been on a bit of a belter this week as well. I think Paladin got up to nearly $18, which is recent decade highs, or record highs, and Boss was back at the highs as well. So I think that that thematic will continue to play on, over the next couple of weeks.
You mentioned BHP with the Anglo-American deadline, 5 p.m. London. I mean, I know you don't have a crystal ball, but if Anglo-American says, again, no way, does BHP still keep suiting? Does it keep chasing?
Oh, I'm not entirely sure, but as long as they don't pay a stupid price,
yeah,
I'm happy with or without it. I think BHP's cheap no matter what. I mean, that potash project as well, I mean, we've got demand for fertilisers going through the roof as well. And ammonia and sulfuric acid are used in uranium and copper refining, which is also used heavily in fertilisers. So its game plan, it's playing into the three biggest thematics probably over the next decade, and it's sort of lingering, kind of mid-range. It's only just popped out of $43 when it's been $43.50, and that range has been pretty reliable for quite some time. But I don't think I'd be selling BHP if it breaks through record highs again. Obviously, your only risk is the economy slowing down, but even still. I don't think, on a 5-year basis, I think BHP is going significantly higher.
And just looking at the overall market, I mean, we said weary Wednesday, not much happened today by the end of the day's trade. Does that really matter though when we're sort of, still very close to records?
I don't think it does, really. I think you've had a bit of a shift in the consumer discretionary sector. That sector's had an incredible run over the last 6 months, but we really are starting to see cracks showing in the consumer. The likes of AP Eagers today, for instance. AP Eagers is a quality company. It's very well run. They're playing into that thematic of the electric vehicles because they've got the BYD distribution licence in Australia, and they're getting all those subsidies and all those grants from the government and tax credits, etc. Look, if they're warning on their outlook, well, I don't really hold out much hope for the rest.
Yeah.
So I think a pullback in the consumer discretionary sector will likely happen over the course of the next sort of month or so. Tech will depend. Technology one, our tech companies really are centred around 4 or 5 really high quality tech companies. Our tech sector will probably outperform in terms of hold up a lot better than to the downside if Nvidia disappoints. Because they've all had recent updates and they've all done very well. So I think Technology One was upgraded by about 3 or 4 people today. It's up, I think it was up as much as Webjet was, around about 9%. So that UK expansion obviously doing pretty well. So I think we'll just have the index itself may not necessarily move a hell of a lot, but there might be a bit of readjustments and money flow out of the banks and maybe consumer discretionary into that mining sector as the commodities continue to go higher.
All right, Mark, always appreciate it. You're on the call, I think, tomorrow as well, right?
I am, yes.
Double duty this week. Thank you, Mark Gardner from MPC Markets. All right, we are going to have a look at the stock of the day. It was, of course, Eagers Automotive. Michael Gable from Fairmont Equities and Michael Wayne from Medallion Financial shared their take with Koshi.
Seeing with this business is a bit of margin normalisation. The revenue growth is still very good. Sales of Toyota cars, for instance, has been particularly strong. But you are seeing a pickup in cancellation numbers. As I said, you are seeing that substitution play out and margins.
So is that what
pressure.
Made the market a bit nervous about?
I think Mark and the management commentated. The commentary was a bit soft on the outlook, saying that they are a little bit cautious and that things do appear to be biting, and there is a bit of a slowdown playing out there.
Right. Not a compelling buy. It's not one of those, well, the market's got this completely wrong, they shouldn't have sold down this business, because it does have to do with their outlook. I guess if it was a situation where the past 6 months were poor but we're positive about the outlook, you could maybe get in there. But I think because they're very cautious around the outlook and we could see that times are going to be difficult, probably a bit early to be buying it.
All right, quick look now at some of the leaders and laggards in a day where we didn't see much movement on the overall index. We touched on Webjet there with its update and really that 8% gain about the fact that investors seem to like the fact that it might split into 2. Some analysts saying, look, it could also be a takeover target there. Technology One also out with an update, sending its shares higher by almost 7%. Illumina, Centuria Capital and Auckland International also having good days today. To the downside though, Eagers Automotive, we've touched on ad nauseum. It was the stock of the day, down 14.5%. Ingham's, Tabcorp, Life 360, and these broker downgrades for Telstra also seeing its share price. And I've written about these in our afternoon newsletter in the wrap, and so they have all the broker downgrades that we saw today, including their price targets. So you'll get that in the ausbiz newsletter. I can't remember them all off the top of my head, but that is why you saw Telstra down 4.5%. Quick look at the small cap leaders and laggers. MedAdvisor up by almost 16%. Gold Hydrogen, we spoke to the CEO last week, having a good day, up 15%. To the downside in the small end of town today, Helios Energy off by almost 16%. And the tinder of the music industry, vinyl, off by 11%. Quick look at what's going to happen overnight. Of course, Nvidia is very much in focus. That is going to be the key one. Also, Target coming through with earnings, UK CPI, US existing home sales and US crude oil inventories. And looking ahead tomorrow here, we've got New Zealand retail sales. It's AGM season. We've got Gold Road, Karoon, Stanmore Resources and Ventia Services coming through, and New Farm coming through with its earnings as well. But as we mentioned, it has been a flat session on the market. We're watching very closely what's going to happen with BHP and Anglo as that 5 p.m. London deadline comes into focus. The fact that you had Telstra fall significantly today is really a key reason as to why we saw those earlier gains on the market peter away when such a big stock falls by nearly 5%. Telco stocks down 2.5%. Utilities, materials, A-REITs and industrials, though, all looking good today. That does it for the COB for this Wednesday. We'll be back bright and early from 9:45 Eastern on Ausbiz. Join us then.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.